Welcome back to Small Caps. My name's Kerry Stevenson, and once again, it's our fortnightly update with Mr. Tony Locantro from Alto Capital. Tony, over there in Perth, how you doing, my friend?
Going really well, Kerry. I'm enjoying the WFH lifestyle, which is work from home. It's all going well. I live about 4 kilometres from work, but it saves me an hour, and it allows me to be brutally honest to my clients and not be embarrassed with anyone hearing. So that's the other advantage.
Well, let's be brutally honest today. I'm really, and for those that don't know, we do a market update with Tony once a fortnight, but we also delve a little bit deeper into a topic of our choosing. And this fortnight, we're going to talk about diversified explorers. Yeah. And, Tony, you know me, I'm a gold nerd, so I'm always looking at the gold. Gold is what everyone's talking about at the moment. But you said to me that there's an area that we need to talk about, which is diversified explorers. Let's just delve into that a little bit.
Yeah, these juniors are the real elephant hunters of the ASX. So they target big mineral systems. Might be a big gold project, could be base metals, zinc, nickel, platinum group elements. So it doesn't actually matter what commodity is discovered. A big discovery is always rewarded on the scoreboard. And most times these stocks actually overshoot to the upside. So in my experience over 22 years, I've had quite a number of major discoveries. They do create substantial returns and a lot of, I call it life-destroying returns, where someone puts in 6 grand, pulls in a couple of hundred, and suddenly they become a bit arrogant, they expect more, they worry about their money, and they just become pretty much not nice. So I call them life-destroying discoveries, but I guess the money helps pay the bills. And that's pretty much outside of the biotech we discussed last time. That's the bulk of my focus in identifying 4, 5, 10 times, 100 times a client's money.
Well, no client would say no to that. So when we talk diversified explorers, you're not necessarily talking about explorers that are looking for lots of different things. What do you mean by diversified explorers?
These are your quality ASX companies run by quality geologists that put money in the ground, that normally have a suite of projects which are prospective for, say, copper, gold, lead, zinc, silver, porphyry, epithermal, every big word that people don't understand. So I always actually, every couple of months, I'll pull out the financial pages and I'll go through it with a highlighter. And that often brings up some gems. So that's how I get educated. I look for changes in stock behavior. I look at what shares are trading at, because they can often throw up some surprises. And one of the best ones, which I did for clients, was Black Cat Syndicate, which is BC8. And that got down to about 12, 13 cents. And that was one of the highest quality gold explorers you could have. And I think they got to about 90.
You're absolutely right. I was and if Black Cat Syndicate, if you're listening, we want you on the virtual gold conference, because I still think it's a nice little stock, and it's come with, and as you said just a moment ago, good management is really important.
Well, if they don't find it, they can acquire it.
Yeah.
So if you've got good people in the industry, it goes back to Independence Group, which I floated. We raised them $4 million, and Chris Bonwick was at a barbecue. And they were selling the Long Nickel mine for $15 million, and it became a multi-billion-dollar company. But they're not going to sell it to any Joe Blow that's going to struggle to pay the money back. And in 2010, Bill Beeman bought the Paulsens gold mine off Intrepid for $27 million. And then Intrepid tried to renege on him and said, wait a sec, this looks better. You have to pay 40. But look at what Bill's done since then. A 1 cent share into something over $15. So it's always.
And as we're speaking today, as we're talking, It's been the announcement of Northern Star and Saracen joining at the hip and creating another very large, well, pretty large gold mining company.
Yeah, that's fantastic news. And Raleigh Finlayson's going to take the role at the helm. I think Bill Beeman stepped back a bit. And that's fantastic news, because what's that is now going to put focus on is the mid caps. So we've seen Ramilius out there being quite aggressive. And I'm sure there's a lot of companies out there with 500,000, with 2 million ounce potential that are stranded, which would make a great corporate story put together. So I'm looking forward to more M&A.
Yeah, I was just going to say to you, do you think that this is just now going to start to open up the floodgates? Because there are, as we all know, there are a lot of explorers, developers, not so many producers on the ASX. And I guess for investors, sometimes it's very difficult to figure out, you know, which ones to invest their hard-earned cash into. There's a lot out there. Do you think that this has opened up the floodgates for a lot more M&A work?
I think, honestly, down the food chain, I mean, I believe that the gold stocks late 2014 up until now have had a dream run. They've taken over from the financials. The bank stocks have pretty much halved outside of CBA, and the focus has become on the gold. But what's got tricky is a lot of them are just institutional money flow and gold price driven. So you're still looking for that growth. And Northern Star has been able to buy mines in a gold downturn. So you need, I mean, the Australian Gold Index at one point lost about 65%. So sometimes gold weakness can be your friend. So Bill was able to go in and buy some assets the majors didn't want. So I think it's going to focus on some smaller companies, and hopefully their in-ground resources will start to be valued upwards of $40, $50 an ounce. You might see some takeover premiums emerge. So I think this is great news for the industry.
Do you think it's going to push Evolution Mining into looking for some more acquisitions to give them a little bit more growth?
Well, they've already made some huge acquisitions. I mean, I remember at your gold conference in 2012, Jake Klein stood up and said, this is the renaissance of the mid-tier gold sector in Australia. And Evolution then was 42 cents and still paying a dividend. So I think it could be a case of yours is bigger than mine. So hopefully we do see a bit of egos enter the fray. But I think Jake's done such a good job, Bill's done such a good job, and Finlayson. So yeah, why not team up where possible to create this big gold company that's going to get overseas institutions excited. So Evolution, yeah, let's see what they do next.
So Tony, do you think for those investors out there, because look, we're talking to the investment community, people are looking for return. We know that the Reserve Bank today announced, interest rates remain on hold once again at 0.25. I mean, interest rates are ridiculously low, so you're not going to get a return keeping your money in the bank at the moment. So, but at the same time, if you don't understand what you're investing in, you can also go the other way and lose the lot. What does it take to find a good company in this market? What do people need to look for, apart from becoming a client of Tony's?
I've actually been snowed under, to be honest.
I know.
The thing is, I actually don't want my level of service to slip. So it's like, slow down. I've got this backlog coming in, and look, I'm happy to take on anyone with a good attitude. But I actually put up on Twitter a picture of Lockie Gilbert and the ladies on The Bachelor, and that's what stock selection looks like for a new investor. Every opportunity looks attractive. Every tip is going to be attractive. But in the end, at the end of any bubble, a lot of people are going to lose 80% of their money. It's a bit like marrying the lady. You'll probably lose 80% of your money. So look, the best thing I can suggest to people is look at some of the diversified explorers I'm happy to mention now and learn what a quality ASX mining company looks like. Because I can assure you there's a lot of rubbish, and you only have to go back to .com, which was nuts. That's when any company that put in a website went nuts. Then we had uranium. I think we ended up with over 150 uranium hopefuls, and how many made it? Bugger all. It's a couple of takeovers, and Paladin almost blew themselves up. And the same thing with lithium, vanadium, ammonium, and any other commodity you're looking at.
Okay, so what are your best tips in looking into this market?
Well, I like the elephant hunters. I get to know management. I recently caught up with a little company called Godolphin. The code is GRL. They have a project in New South Wales called Lewis Ponds, which is showing some really good signs. They have some massive targets at Copper Hill East. They have good management through Buckhorn, and it looks like a well-managed junior, and they don't have a profile. So they're trading around 22 cents. Market cap really only around 14 million, and they've still got a few million in the bank. So that's tiptoeing through the tulips, but they do have over 400,000 ounces of gold resources. Lewis Ponds is showing some amazing anomalies, and they're redoing the resource. So a lot of the stocks that have the major discoveries are sleepers, not well known, and they're not talked about on Twitter. Then suddenly they're everyone's friend. So Godolphin, I still believe, I've backed Red Metal for years. The stock's traded between 3.1 and 52.5 cents. Their last drilling results were inconclusive. So the stock got smashed down from 17 down to about 10.5, 11, where it is now. But Rob Rutherford and Joshua Pitt are the most backable people in the mining industry. This company's absolute quality. My clients, we've accumulated about 10% of the company. And it's a company you hold just in case they make a major discovery. And they've pegged ground around Rio's, Yarri, that Wirru area as well. And they're just doing some proof of concept holes now. Plus they have a number of zinc, silver, and some walk-up targets as well. So to me, that is the ultimate quality ASX exploration company. As I said, it does have some decent trading ranges, but I mean, I read on Twitter and that I cop a lot of flack because it doesn't move, but it's the kind of company that's hero or zero, one drill hole and you're out of there. So the next one, Stavely Minerals, SVY. So I was fortunate enough to raise Chris a lot of money at 15 cents. Then they had that 40% copper hit last year, and they ran to $1.42. So they're drilling out the Cayley lode at the moment. So they raised money at 60, but they're now back to 54, 55 cents.
55, yeah.
Yeah, I think that's an outstanding buy because their market cap relative to the sector is way undervalued. I think it's about 130 million, give or take, with a lot of cash. And Chris Cairns is the type just to keep drilling this out, and they've still got the porphyry targets as well. So what happens when they do a placement at a higher level? People expect to flip it. And there's not a lot of genuine speculative investors out there. They just want the flip. And as soon as there's a fear of not having a capital loss, they'll sell even below the placement price. So yeah, we've been accumulating a lot of Stavely in the mid-50s and we'll continue to do so. Another little stock we've accumulated a lot of is called Metal Bank. They've got a gold project called 8 Mile. It's very close to Evolution's Mount Rawdon mine. They stuck about 7 holes in and they actually got a small resource and they're hunting a much larger system. They're well cashed up and drilling is about to commence. They've also got a project called Eidsvold where the government is providing funds for 2 holes. This company is run by Innes Scotland. Innes ran Citadel from nothing to about a $1.2 billion company.
She's a very smart lady in Scotland. She knows exactly what she's doing. We like to hear the ladies going well.
Yeah, no, she's great to talk to. She's come in, she's changing the focus of the company. They're speeding up their exploration. The geologist has done a great job, and a lot of the people that followed her into Citadel have followed her into Metal Bank and a sticky.
Tony, where is the Metal Bank asset? It's one I don't know that well.
North Queensland, up near Evolution's Mount Rawdon. So and they pegged that from under their nose. So certainly going to be interesting. But Yeah, in the event of a gold hit, that thing's a disco inferno.
I love it. But by the way, ladies and gentlemen, I'm just going to point this out to you. Tony and I are having a discussion right now. Tony's just talking to you about his stock picks, but listen, guys, you got to do your own research as well. And if you don't want to do your own research, that's cool. Go and be a client of Tony's and let him help you in that one. But this is not financial advice. You've got to make sure that you do your own research and that you get out there. And these are just ones that Tony's looking at. There's a lot out there. Some, as Tony said before, are dogs, and you've got to know which ones are. And I also think, Tony, the other thing is, don't go and put all, as the old saying goes, all of your eggs into one basket, because as you say, some of them can go really well, but others can just tank. And for some people, if they go into a dog, they walk away saying, well, I hate the mining space, it didn't work. Well, that's because you either didn't do your research or you're not diversified. Would that be right?
Absolutely. And these days where you can pay $5 brokerage to invest $100 and 10,000 people rush to it, it's just absolute game on. But I don't think that a lot of these people will look at these quality companies. They'll just rely on tips and volume. But probably the star recently, Kerry's been Chalice.
Oh my goodness, yeah.
Yeah. Alex Dorsch was in the Saturday paper here as I think he's 33, one of the youngest managing directors. And this stock was 11, 12 cents forever. It's like a Days of Our Lives stock where you can go away for 3 weeks and it's 11, 12 cents. But they're now $2.80.
Oh my goodness, because they presented at the gold conference last year. And I think then they were about 27 cents.
Yeah, they're running on the Victorian gold, but he's made it's a PGE nickel copper discovery, but it's 70 kilometers north of Perth.
Yeah.
It just doesn't get any better. And once it's a mine, there'll be no such thing as FIFO as well. But
are there any challenges with its location being so close to the infrastructure, and is it on farming land, or are there any challenges?
Well, there's always going to be challenges, but what canola farmer, if they're growing canola, is going to refuse a mine with royalties, Kerry? So, I mean, that's all going to come at a later stage. But what I've found is when Sirius drilled into Nova, Mark Bennett was down to his last $50,000. So Sirius was 5.7 cents and ended up peaking at $5 before being taken over by Independence Group. So often when you have that exploration frenzy, the best time to sell is when the stampede's on. Normally a company will make a discovery, they'll have a run, they'll then raise money, and then the second push. So you don't want to be holding a company that goes to sleep. And my strategy with my clients is to sell all the way up into that discovery.
So are you saying that some of the companies, and let's not mention any names, Tony, but there are some companies that have made big discoveries, their share prices had a good run up. Would you tell people to get out because it's had such a strong run, or would you say sell half and then, I mean, what's your strategy there?
Oh, we tend to just sell all the way up. Where I remember when Sirius had that drill hole, it opened up at about 24 cents and was straight back to 19. So often, and I go right back to Minotaur in 2001 when they found Prominent Hill. It was like 100 meters at 3% copper. You could have bought that stock all day at 28 cents. So it's often the first day is where the people that don't know what they're doing, the star bulls will sell, and you've got pip traders also. So often on the first day, the key with these discoveries, if you can read it or know someone that does, is to actually be on the buy side, not the sell.
Right. Okay. So you've mentioned a few companies earlier in our chat, which you like. And we started this discussion off with the diversified explorers. Do you think that the market is getting a little bit toppy at the moment? Because we are in interesting times. Like, for example, this to me feels like We've got a lot of government stimulus at the moment. Over there in Perth, it's like there is no virus at all. But over here, if you're in Victoria, it's a shocker. Here in Sydney, we're doing okay. Property market's on an absolute tear, and you'd think that nothing was going on. What's your view of what's happening at the moment? And should people be a bit cautious and have some of their, I guess, their money in cash at the moment?
Oh, absolutely. But what I've found is over the 22 years I've been doing this is not to worry about the economy, just to worry about the individual company. And a lot of the biggest discoveries have occurred in terrible markets.
Okay.
So I think it's an advantage to have a discovery in a bad market because you're going to get more attention. And a base metals or gold discovery is worth a lot of money, regardless if Trump gets COVID or something else happens. Because if you worry about everything, there's always reasons not to buy, and people tend not to buy things because I'm worried about the market. So yeah, life in Perth's pretty good. We actually just got $600 credit on our electricity accounts, and it's not mean tested.
What?
Yeah, so McGowan, through the Bell Resources settlement, has given West Australians $600 credit to their electricity bill. So there you go.
There's an election coming up, isn't there?
Well, no one's seen the opposition, so.
Tony,
Yeah.
final comments before we wrap up this fortnight's market wrap with you. Markets are strong at the moment. Gold not at its all-time highs, but hanging in there. Copper looking very strong. What are your thoughts on the market right now?
It's hard to say, honestly, because it's dominated by day traders, pip traders, Chi-X traders. I haven't seen this madness since we had those 1,000% days on a few crappy stocks. So it's hard to read. I just think that once the stupid money comes in, I don't think you should take that valuation provided totally to hand and actually sell into it. So I think a lot of these stocks, if you've made 4 or 5 times your money, I think that's the time to start trimming it because the hot money keeps moving. So I think this is an interesting market. And the good thing is, well, it's not a good thing. There's no precedent for what we're going through.
No.
Absolutely. And as long as the Dow Jones, I think it's going to fall away. But if that does that in an orderly fashion, you're getting bugger all interest in your bank. Property, Melbourne's starting to fall off a cliff. Sydney's hanging on, but it's all this stimulus and a lot of unreported sales. So I think once we come out of COVID, we're going to realise that there's no real economy left. And it's a bit like 2017, that all this speculation, once sentiment changes towards property, look out below because Australians are going to end up hating property and it'll be much despised. And there was a...
Tony, do you really think so? I mean, right here in Sydney at the moment, I got to tell you, it's on an absolute tear, you know, with people going over the odds in property and everyone's yee-hawing at the moment.
Yeah, but that's stupid money. That's just like the topper.com, which is, you know, forever. I've come up with a saying for people scared to leave Sydney. It's called harbour hugging. I just think that's what they're hugging, a stupid harbour bridge and the Opera House. You go down a Circular Quay and the place stinks. I can't wait to get out of there.
Steady.
Yep. Oh, well, it does. I'm just speaking the truth. But why should Sydney house prices trade at 13 times income when the long-term average is 4 to 5? And we've got so many people out of work and 20% of people that have deferred their mortgages aren't answering the phone.
Yeah, so, but you've also got to say that, you know, there's government stimulus going on. There's funny, as I call it, the funny money is being printed. You know, it's 24/7 printing. So, you know, it means that your purchasing power is going down, but real assets are going up.
Well, you know, you look at interest rates. Look, there's 2 ugly words, and it's called price discovery. So if you've got 800,000 mortgages and small enterprise loans deferred, only takes a handful of sellers in a suburb and you're 20% down. So every OECD housing bubble has failed. Everyone has burst, and we're not different. And people can hug the harbour forever, but people are moving regional now. You don't have to live near the city as long as regional areas are going to boom.
Yes.
So that's what's going to happen. So I just think without precedent, but I'd be very cautious if you're leveraged to the hilt, say somewhere out at Penrith. I'd be very worried.
Tony Locantro, as always, I love our fortnightly catch-up, as do all of our viewers. Thanks so much for joining us today, and we'll see you in a fortnight with some other little gems of wisdom from Tony Locantro. Thanks for joining us today.
Absolute pleasure. I look forward to it.